Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is Scalping the NFP Fallout. We had an EPIC NFP number this morning. Connor brought it to you live, but definitely looking at the price action right now. One trade that I'm looking at very, very closely, let's just get right out to it, was one that we covered on the different channel, but we were looking at this one earlier today. This is a 920 EMA. This is a 920 EMA crossover, and right now it looks like we've got our conditions and we're ready to roll with this thing to the long. Right here, you can see you've got sort of that oversold territory on our RSI, creeping back up. And now all we're looking for is that crossover. If we can get that crossover, we're going to have an opportunity right here. And we're about T minus 4 minutes, 20 seconds. I mean, if we want to go long right now, we really can, because the crossover looks like it's going to develop. But remember, you're probably going to want to wait for the bar close before we get long here. But this is definitely a trade that I'm looking at very, very closely. Ivy, good to see you. Bobby Bob, always a pleasure. We got some good comments in the live chat about the gold trades earlier today. So fantastic stuff. Mark Corb, what a morning. Yeah, I've been on it since about 4:30 local time, sort of watching this price action, giving some thoughts and opinions on what I thought the number was all about. And, they launched another contest over at TradingView, so I've been sort of engaging that, sort of trading some S&P 500 futures. I think that's going to be a pretty good trade later today. I expect whipsaw action to dominate the trading day, but we've just got to wait and see exactly how it develops. This would be one you can see right now. I'm underwater on a couple of these positions, made a little bit of money, but I'm also short. I'm short WTI. I'm short the S&P 500, and I'm long silver. The silver trade's going to be a swing trade. I don't see really turning loose of that anytime soon. I also think short's a way to be here on WTI crude. As far as the S&P 500 goes, I'm looking for that whipsaw action, that big pullback later today, and I would be surprised if this one doesn't close in the green, but unless it turns into a trend day up, if that's the case, that's all right. Had a couple pretty good trades earlier today, but I think we're going to do pretty well in that. I think today isn't necessarily a bad day to be contest trading, so if you're in some of those contests, fantastic. Bryn98, good to see you, Bryn. Thanks. I just saw you sent me a private message. I'll get on that right after the live stream, but for right this second, we're just sort of basically looking at some 920s. Now, a couple of things that I would point out here on the 5 minute time frame. Pretty good stuff, really pretty good stuff as far as price action goes. I'm impressed with gold, number one. I want to be long gold. If I had my druthers, I was asked this question probably 50 times this morning. Gold, buy or sell, buy or sell, buy or sell. I said, you got to buy it. You got to buy gold right now. I don't want to get caught short gold. I don't have any question about the direction of this market for me. Dibble, good to see a double right here though. I mean, how do we in fact get long using something like the 920 or even the 9 EMA? I mean, remember the 920, we're just playing a crossover, but with the 9, we're just looking for confirmation on our RSI and maybe a close above or below our 9 EMA. So when I'm watching that, I'm saying, am I really going to get a chance to trade gold anytime soon? And the answer is no. The answer is no, we're not, because we're right in the dead center of that RSI. Now, for me, and what I like to do with my Fibonacci's, this is my analytics from earlier, and the real question was, Shane, do you want to be long or short gold? And I said, well, a perfect world, we get our weekly. I'm not going to toggle back to the chart, but this is a weekly 38% right around 27.20. That would be just a double-fisted buy for me. I mean, step up, throw down, and watch price rise. I mean, if you can't get a winning scalp from there, something really serious has happened to the market. Now, 78%. This daily, I really like this daily as well. Here's why. Look at your price action. Okay, big time sell-off yesterday. 1.5%, negative 1.56%. You've also got sort of an order block down here. So if you're a sort of a smart money concept or an order block trader, I know that, well, I'm sure Connor has something to say about this zone right here, but I'm interested in this area right here because it's my Fibonacci golden zone. 2740-ish is a fantastic buy, but take a look at what's happening now. We're clawing back into yesterday's range. You want to be long. You want to be long. Now, I can't really tell you to buy right now, because if you do buy right now, you could go for a ride, and I don't want to see anybody go for a ride. And what I mean is you might take a big draw down here. I'm waiting for 40-ish. I'm waiting for maybe a big sell-off next week, 27.25. I would love that, and 27.20 is even better. But I love this order block right here. I mean, if I'm talking about trading gold, that's pretty good. A lot of action in there. Pretty good little order block there. So I'll be watching that closely in gold. But one other we're working on another video. We put a video out earlier today that was on the triple moving average strategy. So if you're a moving average aficionado, be sure to check it out. But what I would point out is we're working on another video that I like, and it's one of these strategies that I think is very good, and it's the rally-based rally. Rally-based rally. And the whole crux of a rally-based rally, you guys guessed it. I mean, it's relatively easy. Rally, there's your uptrend, and then what do you got right here? Base, sideways, a period of sideways trade. Where do you think your entry is with your base? Either at the top of the market, top of your base, or right there at 50% of your base. Now, I'm not drawing this in retrospect. We saw what happened yesterday in the gold market. In my view, that's a rally base, rally pullback. It doesn't get any better than that. It doesn't get any better than that. So even though that video hasn't hit, now it'll hit in a few weeks probably, but that's the type of thing where you can really make a lot of money by just understanding how price action works. Now on a rally-based rally like that, what would you really have to do? How could you execute the trade? 50% or at the top side? Personally, I would aim for the top of those candles, those candle bodies. To me, that tail right there, I wouldn't be going at 58 buy. I want to buy right down there, right around 50, and we talked about that a lot over the past couple of weeks. Where's your stop loss? Stop loss is right down there beneath the base. I like that strategy. It's a pretty good one. This is one of those that I would definitely be looking to maybe incorporate or at least combine with one of my Fibonacci retracement strategies. Now, right here, you can see it has been no secret that 2024 has been the year of gold. In my mind right now, and I'll go on record as saying it because I would be shocked if we don't hit, this gold market is going to 3,000. Now, before anybody goes out there and says I'm giving financial advice or telling you what to do, and Shane told me to buy gold because I'm going to get out at 3,000, remember that markets don't move in straight lines. And I have to add this as a disclaimer because it's very important. This is a huge move, big move. Are we going to finish this? Yeah. But what happens? How do we get there? Well, that we don't know. So if we're talking about, okay, Shane, I bought here and I'm looking for this and I'm just going to walk away with my money. Well, remember that we could easily do something like this and mill around down here before we get a big push up. So I want to be very, very clear on the gold market and what I think in a perfect world. And hey, we may get this early next year. This is probably going to be my Q1 trade because I don't see anything really changing for the gold market. 2480, 2500. That could be a Q1 trade that's absolutely out of this world. That could give us great trade location for the next 6 months. We just have to be very careful with how we enter, when we enter, and we got to get in there with discipline. So I've taken some time here to really unpack this market because I got about 50 questions on it earlier today, and I want to be crystal clear about what I'm talking about with gold. Absolutely huge. Very disappointed right here. Very disappointed in this Euro USD trade. Was right up there with bells on. We were up there at 109.25, and what happens to our trade today? 109.05. So trade's still in play, but we missed the easy money. We missed the easy money there, and that sort of disappoints me because coming off the back of a big time release like NFP, we want to nail that. We want to get up there. We want to get our number and just walk away with the money. That's one of the hardest parts of trading. One of the hardest parts of trading, guys, is when you just get your number missed. And even though it missed it by 20 pips, we're still right there in a high volatility, high volume situation. I would have loved to have got that. If we could have got that, that's the old you go to the airport and buy a plane ticket with your winnings because you go, well, we just made a stack. Unfortunately, we didn't get it. They pay us to wait. They don't pay us to trade. All right, let's get back to this dollar yen. And there it is. I mean, right there would be your entry. So right there is your crossover. You're going to be long that 920. Why are we long? Remember, you're right here, oversold on your RSI, and we're looking to get long. How do we get long with a crossover? We're looking for the 9 to cross over the 20. So right here, this would be our entry. Now, I get this a lot too. Okay, Shane, do I buy right there on the close? You can, but look at what happened right here. You would have bought on the open. Why? There's your crossover. Crossover, as soon as that bar is complete, crossover, there's your bid. There's your bid. So let's say we missed it. Does that mean this trade's over? Not necessarily. Do I want to buy right up here now? No, I don't. I don't think your trade location's good enough, and we're going to get better trade location. But what could I do? Well, I mean, we could do things like this. We could run some Fibonacci's and see if they combine with the moving averages. That could be great. You could go right down here and really do the entire range since NFP. You could do something like that and then be looking to get long at 152.4. For me, it would be as easy as I'm going to wait for a pullback. If I didn't already get in on this trade, I'm not going to chase price all around. I'm not going to chase price. I'm not going to chase it all around the market, all around my charts, because I'm going to lose my tail by the end of it. When you chase price, you end up making way too many trades, and your trade location sucks. It just sucks. It's consistently bad. Why would I say, Shane, what are you talking about? I mean, it's only trading, 152.67, and my entry would have been right here at my open, which would have been right around 152.37. I'm not giving that away. 30 pips. I'm not giving that away. I'm going to wait. So if, in fact, you wanted to wait on this trade, wait. I'm not going to eat anybody's lunch for going long right here. Or right there. But right now, you're buying the top, and I wouldn't do it. I would wait. Remember, if you're going to scalp these strategies and you're going to be aggressive, you got to be on the ball. You got to be watching these things all the time. And right there on that crossover, there's your opening buy. Bang. Big-time trade. Where would my stop loss be on that trade? I mean, I hate reverse engineering these things, but they're really hard to sort of scope out in real time. You could do it right here. That's probably where mine would be, right beneath this swing low, a couple of pips, looking for that big move topside. As far as your profit target, where would that be? Well, you could be shooting for a market structure right there, which basically is your bullish 5-minute market structure, sort of the top of this market. You could be doing that, or you could just wait, or you could be looking for 153 or 153.40 or something much bigger. It just really depends on what you want to get accomplished. Pretty good trade. Did we know that the market was going to break in our favor? No. Those are the kinds of things that just make you look brilliant, but not necessarily predictable. We don't know when the volume's going to hit unless we know when our numbers are coming, like in NFP. So I'm a hybrid trader. I look at the numbers, I look at the economic events, then I look at my technicals, and then I get involved. Now, that's a pretty good trade on the US dollar, Japanese yen. As far as our gold trade, what do we got? We still got nothing. We've got a flatlining gold market. Okay, we did have another one that I was looking at earlier today, and this one was on the Swissy. Now, this is fascinating stuff. Now, this is your 9. This is going to be your 9 EMA. Okay, this is just a 9. This isn't a crossover. This isn't a 920. This is a 9. Look at what you have down here with your RSI. Oversold territory. What does that tell us? Tells us that we're looking for a buy. if we're just trading the 9 EMA in isolation without a crossover, without a 20, RSI confirmation tells us we're looking for a buy right after we're oversold. Where are we going to go? Right there, first bullish close over the 9 EMA. And that's going to be really your trend play. So right now you would be in a situation where you could manage it a couple of different ways. Number one, you could wait until we get into overbought territory in the RSI, take profits there. Or number two, you could wait for a bearish close beneath the EMA and get out there. It's completely your call, completely your call. Okay, how would I do it? I would have had a fixed risk versus reward. I would have known exactly what I was risking. I would have known what I wanted, and I would have already been out of this thing more than likely. I would have 1-to-1, maybe even a 1-to-2. Universal, good to see you. Universal, welcome. Happy day in YouTube land. All right, guys, we got to talk a little bit of fundamentals here. We're gonna hit on U.S. oil. I'm sort of looking at the price action here and trying to figure out exactly if my oil trade's going to pan out today. Right now, it looks pretty good. I think we're going to be just fine. S&P 500 is rallying a little bit. I think we're coming off there. And then the silver trade, I'm going to be in that one for quite a while, I would say. All right, this is the employment situation report from earlier today, and I put out some stuff on Twitter, that I won't call it controversial because I'm really not that controversial, but I'll say that these numbers are complete fugazis. They've been lying to us all year long, and by they, I mean the United States government has been putting lipstick on a pig. They've been dressing these numbers up all year long. I've been ranting and raving about it since March. I mean, this is consistent, and what happens is what eventually, the chickens come home to roost. That's the old saying. And take a look at what you had today. Total non-farm payroll employment was essentially unchanged, 12,000. Now, the excuses and what the financial media is picking up right now is hurricanes Helene and Milton. Those were the big things, and I don't buy that at all. I think that we had a situation where right now the revisions are everything. So I go right to the last paragraph of this thing. The change in total non-farm payroll employment for August was revised down by 81,000 from 159 to 78. Remember, they revised that number up. So we're revising numbers up. We're revising them down. This is complete political football. It's nonsense. Be very careful when you're trading these things because the markets aren't buying it. The markets aren't buying these numbers. What we're trying to figure out is, A, are we in a recession? B, are rate cuts coming to stimulate the employment sector? And C, will the markets grind higher on rate cuts? Now, right now, I'm watching equities go through the roof. We're up about 400 on the Dow. S&Ps are up about 55. What I would say is everybody right now is beginning to price in those aggressive rate cuts, and we're pricing them in to try to figure out if, in fact, the Fed can keep us out of a recession and preserve a soft landing. Now, I'm going to have FOMC Live for you next Thursday. It's Thursday this week. Election Tuesday, FOMC Live Thursday. Typically, it's a Wednesday. They're not going to do it Wednesday because we're probably going to still be dealing with election fallout, and the Fed doesn't want to speak then. It's unique. I have never seen this before, but that's what we're going to do. So your changes, essentially, were 81. Now, this is the one that I've been ranting and raving about last month, 254. They revised those down by 31. In my opinion, and I think it's accurate, next month, okay, when we're looking at November's numbers, the election's probably going to be over, or they're going to be in a court battle, or there'll be a civil war going on here in the United States. I really don't know. I know there's a lot of people saying a lot of things that are pretty inflammatory right now, and I'll say that the election is going to really, really be a contested one. It's going to be hotly contested from both sides, both the Republicans and the Democrats. I don't expect any peace at all here until January. Now, next month, the numbers don't matter. The election's out of the way. If this was a 12,000 this month, there's a damn good chance that number's negative. If they revise that down to negative, we're on the precipice of a recession. Think of what we had, 2.8% Wednesday. GDP missed expectations kind of badly. Okay. Unemployment. How did unemployment not rise today? It was unchanged at 4.1%. Yet your jobs numbers were flat and you revised it down from last month. There's no way unemployment didn't go up. So what I'm saying is buckle up and get ready. Because when we're sitting here in the first week of December and we're talking about November's numbers, reality will begin to set in, and these numbers will begin to work themselves out as we roll into 2024. I don't know that there's any way out of a recession at this point. it's tough to overstate how bad these jobs numbers are. In fact, they're so bad that we have this. Okay, 6 days, 3 hours. We'll be here with bells on. I'll wear a black shirt. Let me see. Damn, these numbers speak volumes. Forex traders, Pozo, you're right. I mean, the numbers are really terrible. And I'm not saying that to be a doomsayer or naysayer. I want the economy to go well. I want employment to be good. I want this thing to boom. I want the world to boom. We got to get back to peace and prosperity and everything growing. That's what needs to happen here. And anytime these numbers have questions around them, it's really difficult for us to say, okay, we're going in the right direction or we're going in the wrong direction. Take a look at this. This is interesting stuff right here. These expectations, we fully expected them to shift. And right now there's a 99.9% chance Thursday that we're going to get a quarter-point rate cut. But there is that thought, and I know it's a 0.1% chance, but this wasn't even on the board about an hour and a half ago, that maybe you get that half-point rate cut. So we're pretty much locked in next week. I would be shocked if they do something big, if the Fed shows up and they cut interest rates by a half point Thursday, you're going to see the equities markets really correct, because it'll be obvious then that we're going into a recession. Now, what do we got in December? 80% chance that we're coming down again. So right now we're still pricing in successive quarter-point rate cuts. All right, where does that put us towards the end of Q1 2025? Puts us in a world of hurt, meaning aggressive rate cuts. We're talking about maybe 3 quarter-point rate cuts in a row, maybe a half-point cut in there. The race to 3.5% or 3.25% with the prime rate, that seems to be the game. Now, for me, I look at stuff like this and I say, do these numbers mean that equities are going to boom? And that's what everybody wants to know right now. And to be real honest with you, if we're looking at something like the US 30, large caps believe that, yeah, we're going up. We're going up. Take a look at this on a 5-minute chart. This is a fantastic look at it. Really, a Fibonacci level. It's beautiful. 5-minute Fibonacci. We go right down to 5 minutes, right down to 38%, and then spring to the top side. That right there tells us that we're trending. We're in a hot trend right now. Where does it end? The Dow's 42,000. We're up around 430 points. The Dow could go up 1,000 today. I don't think it will, but it could. And the reason why is we believe that your interest rate cuts are on the way. So when we look at something like this, the question now becomes, will these rate cuts drive the markets higher in Q1 of 2025 and through Q4 of this year? They're being baked into the cake right now. And the reason why the traders are baking it into the cake right now is because they know that jobs number was brutal. And they also know that you can't hide a lagging employment situation forever. And when we get into that situation where all of a sudden the rate cuts aren't exactly gravy, they're a necessity, then there's major problems ahead, more than likely a recession, potentially a deep one. And it doesn't matter who the president is. I mean, you may get a little bit of relief through certain policies that have to do with energy, maybe, but big picture, it's going to be really tough. So if we're looking right here, I mean, we're in overbought. I say that wrong every time. It's tough to keep it straight live. But if you're in overbought territory like we are right now on a 5-minute chart, let's go ahead and throw our 20 up there. Okay, there's our 20. What are we looking for? We're looking for a crossover. Are you going to get it anytime soon? No. You always monitor the distance between the 20 and the 5. But what's going to be happening towards the end of the day? We'll be in overbought territory. We'll have an opportunity maybe to catch the top of this thing towards power hour in another 4 hours or so. Now, it could come sooner than that, surely, but that's what it looks like to me. As far as how high do we go right now, I have no idea. I mean, if I'm trading the US 30, it's very simple for me. I'm forgetting moving average. I'm forgetting all of it. I mean, this is easy as just buying Fibonacci's. 1-minute chart, hot trend, spike low, most recent spike low to a spike high. I'm not real big on having all these windows open, but you guys sort of catch my meaning. Spike low there, And then you're just going to work from the swing high, the evidence swing high, and just try to get that pullback. We did something like that on the YouTube channel earlier today or over on Forex Signals YouTube with gold. We caught a beautiful gold trade. This is the same type of thing. This is a hot trend. So if I was going to go over here and maybe trade something like the NASDAQ, you'll see the NASDAQ is already retraced and ground higher. Right now I'm in full trend mode. 50% and then a bounce. How about the E-mini S&P 500? 1 minute chart, pretty good pullback. Now we're headed higher. Let's go to a 5 minute chart. This is the one I want. 100%. It's that simple. Working from that spike low, as long as we have good market structure, and then we get that pullback bid, then we'll have something. Then we'll be cooking with gas, as they say. So I'm definitely watching these for pullback buys until proven otherwise. All right, let's take a look at some macro levels and see if we can get sort of the game set for what we want to get accomplished going into early next week's trade. It's always important. Next Monday is going to be crazy. You're going to be still pricing in today's brutal number. We're going to have all weekend to think about it. Odds are you're going to have something geopolitically happen over the weekend. We've seen it a couple weekends in a row. Last night, North Korea was launching missile tests. It was revealed that there was 10,000 North Korean troops on the ground in Russia. Interesting. A lot going on. And elections Tuesday. I would be very, very, very careful taking home anything. And I mean anything, long, short, whatever. Anything can happen over the weekend. I think that if you were ever going to go home flat and just take the weekend off, this is it. As far as getting a great buy here on gold, that would be fantastic. But let's go ahead and try to evaluate what's happened here today. There's your daily. What do you have? Bullish. You want to be bullish here? I wouldn't sell until you get right up around there, and even then, I wouldn't sell. Top side 3,000 is definitely what I'm looking at. If you want to take a position from here, you can, but it could get really, really hairy, really choppy. You could see a sell-off down here before we get the big move up. So we talked about that just a second ago. Do we have any really steadfast bid levels to get in on? Not really. You could bid right there, 27.40. If you can get it today, that's probably a pretty good one, 27.25. But I wouldn't go any deeper than that. As far as time frame wise, today's very, very choppy. Now, if you're looking at a 30-minute chart, say, and you want to really get in on maybe a late day trade, once again, you can't use Fibonacci's in this situation or you'll lose. Right there is your NFP level. You're sort of making a run at that low. What do you want to be, long or short here? Boy, if we take out that NFP low right there, that 30-minute bar, odds are we're going to get a chance to buy our 40s. And that's what I would rather do. I would much rather do that. I think we've got a better opportunity there to stack a few chips before the weekend. If we're going to scalp, that's probably going to be your scalp, 227.41, somewhere in there. And we can easily get there, guys. We're coming off in a big, big way. Right now, you probably would want to go short if you were going to just take a shot at it. You're taking out that NFP low. Price action, more than likely you're going to get short there and probably make a few bucks. Let's go ahead and see if we can get this thing short. Just sell it at market, see what happens. So right there would be our trade, and you can see the spread is always an issue. You don't have to deal with that in futures, but right there we took out that NFP low. That tells us that there's a lot of pressure there, Dovish NFP suggests that gold's going to go higher. Gold tops out, and now we're just wiping out all the retail longs. As a day trader, you could probably make a little bit of money here trying to play this thing right down to that 40 level, 41 level. Just remember, this can be very tricky. And another thing, the closer that you get towards today's close, I'd be damned if I was holding shorts gold going into the weekend. I think that's a suicide mission. You don't want to do that. There's too many things that can drive gold directional over the weekend when the markets are closed. So you definitely want to be careful with this. But something like this, we'll give it a shot. Take a look at what's happening now. Now we're sort of rotating back up into this range. Do we get a push here and maybe take that 50% level out at 27.50? I think it's possible. We sold 48s. Is it high risk? I don't know. Let's just wait and see how this develops. But I want to buy down there, 27.41s. I would much rather buy there. But this is intraday trading, guys. Where would you stop yourself out on a trade like this? It's hard. Let's go to a 5 minute and have a look. You got that 5 minute hammer setting up. That's bad news if you're short down here. We just threw a market short in. That hammer sort of suggests that, yeah, we sent a probe down there. Now we're reversing. This could definitely be trouble. You can see the beginning of a big reversal. And right there, what happened? We tested the waters beneath 50, and now we're right back up to 51, somewhere in that zone. That's why intraday trading is so difficult. Trying to get in on that price action, that pressure. Man, that's tough. And even this situation here, let's say we wanted to trade this on a 5-minute chart. Something like that. Could we send them short right there? 51's a better short than 48, clearly. Now we know that. But where would we stop ourselves out? You're sort of on the hook until you get up here to 58. If you do take a position here, I would avoid that. This is a rotational market. We're not trending. So typically Fibonacci's work a hell of a lot better in trending markets. They just do. Gold, macro trend is definitely up. You definitely want to be long. But as far as the short side of this market, be a day trade at best, and more than likely just a good scalp. So right there, you got a decent short right there from 51, but the pressure's on. This market's rotating back up. If I had my druthers, and you can see how bad we're getting hit right here, I would much rather be long than short. No question about it. No question about it. So let's just go ahead and wait and see how this pans out here for a few minutes. But I'm interested to see where gold closes today. I would be very, very, very surprised if we actually close down flat or negative. I think that's sort of a long shot there. All right, let's see. E-mini S&P 500. Can we get a pullback here? Probably not. At least not right now, at least. Let's go dollar yen. You can see this dollar yen trade turned out to be pretty good on this 920 crossover. Really a beautiful trade. Went up and hit our profit target. As far as what can we be, sort of expecting, Euro USD, we missed our trade. That's unfortunate. Let's take a look at a few of the other majors, and then we'll call it a day. As far as what we're looking at, Great Britain pound USD, it's clear that the USD probably is going to give back some of its puff. Let me see. Could we go over silver? Absolutely, Brent. I'll pull silver here in a second. The USD is going to give back some of its strength. It has to. Because our rate cuts. We're thinking rate cuts now. That's going to really hurt it. So if I wanted to trade something like the Great Britain pound USD, do I want to be long or short? If I have good trade location, I would probably much rather be long here than short. So what's good trade location look like? There's the view from 10,000 feet. Spike high, spike low, spike high, 50%. That's really not much help. I would love to buy in down there at like 127.28. Perfect world. Probably not going to get that. So you see the big negative month, and now we're just sort of chopping back in to this month. I would expect a decent draw, and then maybe a potential to sell up here. Give us an opportunity, maybe, just maybe, to get in on something relatively sweet. Weekly. And there it is. That's a good trade location of the short up there. Pretty good for a scalp, 130.64. Something like that, we could definitely try to scalp that. As far as your daily, I wouldn't even worry about your daily chart just because you've got a doji here on the weekly. Odds are you're going to have a real ugly daily chart, a real ugly one. All right, let's take a look at silver. Let's see. What am I? I'm long silver here. Yeah, this one's underwater a bit too on that contest. I'm long, but this is a good look at why I'm long. You can see we're trading sort of here's your daily silver market, but 33.06, clearly that's big. I fully expect us to move much, much higher here with silver. I think that we were probably going to test 35, maybe even 40 by the end of the year. So we'll probably hold a position for a month or so. Maybe we're wrong, maybe we're not. But something like this, the low, there's the high. So a pullback buy right here, which we may get today, would be like a 32. Would be a 32. That's not bad. That's not bad. So if you got like a 31.95 somewhere in there, probably a pretty good bid. 31.1 down there, that's a pretty good bid as well. But let's get rid of all the short-term stuff and talk about the big picture because it's important. It really is important to see what we're sort of dealing with here with silver. Number one, that's a flag. We went over this the other day. Beautiful, nice big run-up, pull back, bang, we're going higher. But don't ever forget the markets have memories. Getting our way back machine. May of 2011. 2012 right there, October of 2012. Essentially, that spike high is where we're trading. What happened in 2011 and 2012? Global financial crisis. Really came on in 2007, 2008, but really began to turn into a deep, deep, ugly recession in 2012. What happened to silver there was we had this tremendous run up, and then we came off. But here's the difference between this. We were in rate cut mania in here in 2010 to 2011. We cut interest rates to try to avoid a financial catastrophe, and that drove silver through the roof. What happens if we end up in the same situation here? And it looks like we are. Bad jobs number. We know rate cuts are coming. It's not necessarily what happens Thursday, but it's what happens in December, January, March. Those are the big ones. So I think that silver goes to 40, no question. Does it go higher than 40? Probably. If, in fact, history repeats itself, we could easily be up into the 44s or 45s. So something to think about there if you're trading silver. Now, if you're a day trader or you're just sort of looking at getting long maybe for this afternoon, this 4-hour chart says it all. I mean, if you're looking at a 4-hour chart, you want to be long, or excuse me, you want to be on the other side of the market. You want to be short. Something like that. Right in there, which is pretty much where I bought. I was bought looking for a big rally. Am I really worried about it? Not really. Definitely could go for a ride, though. Daily chart. What do you have? Sort of have a double top formation. Nice big rally. Boom, pull back, sort of an inverted Bollinger W, a Bollinger M. Something like that, though. Do you want to be bullish or bearish here? A big 2-day sell-off, sort of a doji today. I would be very surprised if we don't get a real good opportunity to the top side of this market. So if I was trading silver, my anchor points would be very simple. Spike low, spike high, 50%, 32.50. That's held up very nice. Will not shock me if we go beneath that, down there to 62%, somewhere right around 32, maybe 31.94. That could be pretty good. Could be a pretty good bid. All right, one more. Go through U.S. oil, and that's a wrap. U.S. oil, this area right up in here, we were talking, I was talking to a trader earlier today who said, okay, I'm long crude oil. Sort of the idea was that, your interest rates are going to get slashed. You're going to have a situation where Trump's ahead in the polls. So these are sort of interesting things here, interesting market drivers. In my view, there's a lot to be said for the bearish side of crude oil today. Now, I was cheering for the gentleman because he had this trade on saying, okay, I just went long. And I said, boy, in order for you to have any success with a long trade in crude oil right now, you got to get over 71.17. And here's the reason why. It's relatively straightforward. It's weekly. Let's go to a weekly, and then I'm going to show you the most important level in crude oil right now that everybody's watching. 71.17, spike high, spike low, pullback. The buy order was put in right up there. That's tough sledding, guys. That's tough sledding. I think that more than likely this number we're gonna trade down today, and a lot of that has to do with election expectations, with Trump being ahead supposedly right now. So long or short, as far as a position goes, I genuinely don't know. I think the election is what's going to make this market pick a direction. But here's a level for you. You're not going to hear it on CNBC. You're not going to hear it on Bloomberg. You're not going to hear it anywhere else probably but this live stream. And I know there's probably some people out there watching, and they'll turn it into cute little Twitter posts, or they'll put it in their column or their show. So if you are, give a little credit. Crude oil was worth negative $40 back during COVID. It was worth negative 40. Now, it was a flash crash. It happened in April of that year, and the reason why was there was nowhere to put the oil. We weren't burning oil anymore, so we had a tremendous amount of supply, so you had to pay to store your oil. In that instance, oil was negative. Now, a lot of things happened. Mom and pop driller got run out of the Bakken, and a lot of folks that were just running, just living like me and you, that were middle class, maybe upper middle class, maybe living paycheck to paycheck, whatever. These folks were drilling oil, and they had tremendous overhead in the Bakken oil fields. And what happened when that price went negative, it killed everybody. And you saw a consolidation, big players like BP, like Hess. Hess was a big one, Continental. They came in and they started buying up everybody's leases because they were bankrupt. It was the big oil squeeze in North America. There's no question about it. So when oil went to negative 40, we have to respect that was the bottom of this market. Our top, Russia-Ukraine, invasion 129.56. I'm a big Fibonacci numbers guys. I don't make any bones about it. That's essentially what I'm looking at when I trade. 38%, 64.52. And before anybody out there says, Shane, you're just drawing levels, no, I'm not. Big time support, big time support, big time support. If we break 64.52, which I think will happen if Trump wins, you're going to see this market fall away to the 50s, probably the mid-50s, potentially bottom out somewhere in the 40s. I don't think we're ever going back to $25 crude oil. I don't think so unless you get another pandemic. Then anything's possible. But honestly, this is the Fibonacci sequence. Trading above 64.50 is the oil market. If that level gives way, then it's all over but the crying, and the downside will be significant, and the pain for the drillers will be big. For us, we'll be able to gas our trucks up. So that's something that I'm looking forward to without spending $100. All right, everybody, that's oil. Let's go ahead and take a look at our gold trade. Well, we're not the dumbest people in the world, are we? Sort of a retracement there. Now we're falling away. If I'm trading, gold right now, we're making money. We sort of knew that level was in jeopardy. I don't trade long-term 50%, but if you're trading right there, 41 is going to be your buy, 27.41 later today. You can get it. Market's falling away right now. You can get it. That gold short is looking beautiful, Ivy. Yeah, we nailed that one. But we did take some pain. Right now, though, this market's getting established under 27.50. I'd be shocked if we don't test that zone out down there. Love my golden zone numbers, too. All right, everybody, that's a wrap. That was sort of the second stream for me today. I want to thank everybody here at How to Trade that joined Connor earlier. He usually knocks it out of the park with his analysis, so things are looking pretty good. If you made money today, fantastic. If you're dancing with the equities markets, be careful. Be very, very, very careful. You don't necessarily want to commit yourself one way or the other, because as we go closer to the close, as we approach the close, you're going to see some frenetic action. You're going to see profit taking. You're going to see people playing the election, people playing geopolitical fears. I expect gold to rally towards the end of the day. But I don't, we got to hit our 41 first. If we get 27.41, then we'll be in there with two fists. But right now, I think that equities are in a position to give back their gains toward the end of the day. I will be shocked if we end trend day up for U.S. equities. That being said, it can happen. All right, everybody, you guys have a fantastic weekend. We're going to be back next week with election week. We got so much going on next week. We're going to have election specials. We're going to have FOMC live. We're going to have BOE live. We're going to have all these events, so definitely check it out. You're also probably going to want to follow us on X, How to Trade on X. If you're on X, check us out, because there's going to be a lot of posts, a lot of trade ideas. Things are going to happen fast next week, and we're going to have to be able to react as quick as we can. That's a wrap. You guys have a fantastic weekend. Get some rest. Next week is going to be serious, very serious business. Anything can happen. Get some rest this weekend. Come back with your powder dry, ready to go. All right, everybody. Had a lot of fun this week. We will see you Monday. Trade the action well, and we'll talk soon. See you.